Hey, what's up guys? It's Corey here with Dapper Dollars, and today we're going to talk about what the heck just happened with Aemetis and whether or not this is time to buy or get out. You ready? Let's get started. So, this channel is all about using online income opportunities through Merch by Amazon and Etsy to build our income online and invest this income in things like the stock market and real estate. If that sounds like something you're interested in, like and subscribe, and let's get started. So, Aemetis is a company that is all about renewable natural gas, and what that means is that they take fuels or take the runoff from places like dairy farms, pig farms, and wood waste places to convert that into biofuels, biodiesel, and a few other things we're going to talk about a little bit later. So that's a little bit about what Aemetis is if you've never heard of them before and you just saw the fact that they went up like, what, 30-something% today? But anyway, that's what they are, and now let's talk about a little bit of why they went up today. So, Aemetis claims that they are going to be $1 billion in revenue within about 5 years. And they're going to make this presentation at a conference, a virtual conference that's coming up, I think either today or tomorrow. And this presentation is what we're going to go over today, because this presentation shows what they're doing, what they're thinking about, and where this $1 billion in revenue is actually going to come from. So let's get into this revenue so we can see if what they're talking about is either hype or it's actually something that they have planned out and it's going to be successful in the future. First of all, they talk about the dairy farms. The dairy farms are basically how Aemetis got their start as far as being in the renewable natural gas space. They use dairy farms and the runoff from the methane runoff from what they call dairy lagoons to convert that runoff into renewable natural gas. So right now, Aemetis has completed phase 1 of their 3-phase project to produce renewable natural gas with dairy runoff. So phase 1 means that they have 2 dairy digesters in place. They have a pipeline running from those dairy runoffs to the Aemetis factory, which are going to produce renewable natural gas in the future. They plan to produce 35 by the end of the, or by phase 3, which I think is going to be around 2025 and maybe 2027 in the future. But we'll talk about that a little bit later. So right now, the main thing is that they have phase 1 completed, and that is good to go. Now, looking at a little bit of the notes. So what they have next as far as their presentation goes is they are working on the carbon zero jet fuel refinery is I guess how they describe it. But anyway, so it is a carbon zero refinery that is going to make jet fuels from wood waste and things like that we'll talk about a little bit later. And keep this in mind, because this is where a lot of their speculation is coming from. This carbon zero jet fuel refinery is going to be a very important factor in the future of Aemetis, whether it wins or whether it loses. So let's look at what they actually plan to do and have projected for this $1 billion in revenue. I hope you don't mind if I read my notes just right here. So right now we have, as you can see the chart, there is a huge portion of their growth based on the biodiesel jet fuel in the future, which is the blue. They have the ethanol at the bottom, which has been the base of what they've done over 2020. That's actually supported them and let them actually keep going in business. The ethanol, as far as hand sanitizers and alcohol, is the base of their business. It seems like it's going to stay stagnant for the next few years. The biodiesel, which is produced in India, is also going to increase. And of course, the dairy renewable natural gas is set to increase by 2025 as well, which is all projected to give Aemetis a total of $1 billion in revenue in the future. Now, like we've said, they are putting a lot of stock in renewable natural gas for jets and the aviation space. This is a little sketchy, just because we're hanging our hat, or they're hanging their hat on this claim for $1 billion on something that they haven't even done yet, and it's a little, it's all vague right now. It's all very great and it's very rosy to talk about, but we don't have a concrete plan of what we have or what is to look forward to in the future. But we're going to talk about that a little bit later. So right now we can see that most of this $1 billion in revenue that they're talking about is going to be from the jet fuel and from the dairy refineries and the biodiesel made in India. So Moving on, they are also looking at doing this $1 billion in revenue by pursuing 35% CAGR, which means compounded annual growth rate. Now, that means that it's basically like having a mutual fund that reinvests the dividends for you. You don't actually get to keep those dividends or the money that is made from that fund. It just constantly reinvests those dividends, and then that's how it grows. It's the same thing for Aemetis, and how they're planning on growing 35% CAGR is that they are going to not take the money out of Aemetis and like they give it to shareholders or anything, but they're going to constantly reinvest that back into the business. So this is great, and if you don't have the opportunity, like with mutual funds, to actually take that money out whenever you have the time to reinvest comes, it's good because it forces you to reinvest. However, with an actual business, you are faced with the process of having $1 million in your hand and saying, do I want to take some of this for myself and maybe I'll just reinvest 75% back into the business, or do I stick to my guns and say I'm actually going to reinvest everything that this business makes and potentially keep the people who work for this company, if not the leaders and founders, at a base salary for the next 5 years? Because CAGR implies that it is going to be all of their growth, all of the money coming in is going to be reinvested, so no raises or no, tax repurchase of shares by Aemetis in the future. So this could be great as far as growing the stock from retail investors' perspective, but if the company itself is not doing share repurchases in the future, that means that they are not taking shares off the table, which drives the stock up higher. So the stock being driven higher is going to be driven by the popularity and their ability to execute on what they have said that they're going to do. And like we've talked about, and we're going to address a little bit more, they have some pretty lofty goals for the future. Now, they have a projected plan for what their revenue is going to be on this next slide, and it is quite ambitious. They have the assumption that they are going to go from, okay, what I'm about to say is based on Q3 from 2020, but what they're showing here on this presentation that's come out is that they are going to they're going to have $9 million in revenue from dairy renewable natural gas. However, if we look back at the Q3 revenue from 2020, we can see that they don't have any revenue and it wasn't exactly up and running. So we're waiting on the Q4 2020 10K statement to come out to show us if they actually have income coming in from these dairy renewable natural gas plants. Because if they do not, that means that they are expecting to go from 0 to $9 million in revenue according to what is on their presentation if they don't already have production in place. If they have production in place and they have people buying the dairy renewable natural gas, then that's great. However, right now we're left to assume that since we don't have the Q4 earnings report from 2020, we're left to assume that they don't have anything in place to actually produce or sell this dairy renewable natural gas. Now, moving on to the biodiesel, they are assuming that biodiesel is also going to increase, again, going from Q3 2020 reports. They are assuming that biodiesel is going to increase 7 times to get them to their 2021 revenue expectations. This is a lofty goal. And finally, we come to the jet fuel business and revenues that they're expecting to do. And again, I don't think this plant's even in place right now. I think the construction may have started, but I don't think that the plant itself is active and producing anything. But they are themselves expecting to have millions of dollars in revenue in the jet fuel business. This is a lofty expectation for 2021 alone, let alone what they're projecting out to 2025. Again, everything on this presentation is prefaced with plan or projected or things like that. And this is great if Aemetis if they can execute on these things. However, if they do not, it is likely going to be detrimental. Now, the phrase kind of comes to mind, shoot for the stars, hit the moon, which means you set your expectations really high, and even if you miss those expectations, you still went really far. Technically, that could be good for Aemetis, but as we've seen from other companies like Dropbox and Vuzix, it's a little bit better to sandbag yourself and say, you can hit maybe 30 yards out, but you're projecting 20 yards out is what you're telling people. Aemetis is maybe able to hit 30 yards, but they're saying that they can hit 70 yards. This is where it gets a little bit tricky. I love Aemetis. I think that they're going to do great things in the future. However, right now I feel like the hype is getting a bit out of control. We're saying $1 billion and all of this stuff is just, I don't want to say it's not adding up, but it is a lofty goal. And I'm all for people doing lofty goals and achieving lofty things, because like I say at the end of every video, someone's going to do something amazing every day. Why not Aemetis? So let's see what they can do. All right, moving on. There, like I said before, there is no real messaging that's been put out about who is going to be buying this dairy renewable natural gas, or who is going to be buying the jet fuel in the future that is going to build the revenue. They don't have any proof out there as far as people who have pre-approved or have been pre-approved to have these sales and these orders come in to buy from Aemetis. They don't have any pre-approved sales for the dairy renewable natural gas. It's just that they're saying that they're going to sell it. Now, California is a very much green state, and any company would likely jump at the opportunity to have the ability to say that they are carbon zero or carbon negative for their emissions. So they have that working for them. However, we don't have any guidance as far as a set amount that has been pre-ordered from any specific company, which is a little worrying, but again, lofty goals, lofty dreams, and it might work. Now, moving on through this presentation, we see that the pipeline is in place for two of the dairy farms, and they are targeting others as well. So they're going to have the dairy runoff collected from these two farms now, and they have the pipelines in place or being built for these other dairy farms in the future. One thing to note about these dairy farms that is super important is that on this presentation, it says that when they sign with Aemetis to have this dairy runoff collected, it is a 25-year agreement, which is great for Aemetis because they're guaranteed that runoff for 25 years into the future, which means that renewable natural gas is definitely expected to be around for 25 plus years. That's amazing for us as shareholders. And in the future, this shows that there is a lot of staying power for this company, at least in the dairy renewable natural gas space, which is the bulk of what they have built their business on right now. So, one thing to also keep in mind is that California is the #1 state for dairy cows in the United States. So Aemetis is pretty well positioned to have a lot of supply in the future to meet potential demand. Now, there's also the benefit that California has put in place these tax advantages. I can't remember what it's called, but there is a specific tax credit or charge if you do not have someone pull the runoff from your dairy farm. Now, that's, not exactly fair to the people who are dairy farmers, because that means that either you have to pay someone to take the runoff from your dairy farm, or you get charged with a tax credit and you're basically penalized because you're putting greenhouse gases into the atmosphere. So Aemetis is pretty well positioned to take advantage of this and provide dairy farmers with a way to avoid that tax credit in the future, but that is where it is right now. And as far as the jet fuel on this next slide, the Aemetis presentation shows the process of how jet fuel will be made, and it's mostly from the wood waste. And this is because California has been escalating as far as the demand for wood waste, which means that there have been additional fires being set to just burn the areas where these almond trees, because a lot of almonds are produced in California, these almond trees in places that are under demand, like we said, are having to be burned because nobody is willing to take that wood waste out, and instead it's just all having to be burned. Whereas Aemetis is now coming in and saying that we will take this wood waste and we will actually convert it into renewable natural gas for jet fuel. That's a pretty big claim. And again, we're going to see if this all plays out, because they are shooting for the stars for sure. And I hope that it works. I think that there's a lot of investment potential behind Aemetis. There's a lot of support from the government, whether it's locally or federally. And it is going to be an insane ride for Aemetis in the future. And I don't know what to say as far as a price target right now. I think once we actually see the presentation and we see the Q4 results for 2020, it's going to give us a lot better guidance as far as what to expect from Aemetis in the future. And we're going to need to look for the different people saying that they're going to buy from Aemetis. Aemetis also has, we talked about this in a past video and I'll link this here. They have an agreement with PG&E which says that the Aemetis will be able to tie into their pipeline for renewable natural gas, and that is going to supply natural gas to residential and I think commercial places as well, so that they are able to put that into the pipeline and make money from that. So that is one great thing that they have going for them. We don't know if it's actually been completed yet. There is an agreement that we talked about in that video, but we just don't know if it's actually done yet. So that's what I have as far as the the presentation that came out with Aemetis that made this stock jump 30+% in a day. It's great. I mean, I think I've made over $500 or $600 in one day just from this stock going up. Again, that's a paper gain I haven't actually sold because I don't really sell stocks that often. Anyway, I hope you guys are having a great day. If you're interested in a new stock, I did purchase a new stock at home. I'll link to that video here where I go over my bullish case for at home. And later this week, I'm going to be bringing in a analyzation of my perspective on the Dropbox earnings from Q4. Look out for Aemetis in the future. Look to see when they actually get people who are, legitimate buyers of their dairy RNG and legitimate buyers and return buyers for their jet fuel in the future. Hope you're having a great day. Hope you have a great week. And remember, someone is going to do something amazing every day, guys. Why not you? See ya.